Welcome to the Biz Easy podcast, where small business is simplified for greater results. Brought to you by Resources and Development. Go to www.resources-development.com for help in taking your business to the next level. And now, help me welcome the host of the Biz Easy podcast, Steve McCrillis.
Welcome to the Biz Easy podcast, coming to business owners all across America. It's your resource to help take your business to the next level. Also, don't forget to stay tuned and learn how to get your free Biz Easy business tool gift at the end of the episode. My name's Skip. I'm the lead business coach here at Resource and Development and your host today as we learn how to stay better focused on the things that make you great. I'd like to introduce you to my partner and our face to the nation, my partner and sidekick, Steve McCrillis.
Thanks, Skip. Appreciate it. Now, we can't really start this without hearing the bad dad joke of the day. Oh, I shouldn't say it bad, just dad joke of the day.
Yeah, the bad, you slipped, right? You meant dad. Well, I hate to disappoint you, Steve, but I had a joke about chemistry, but I don't think it'll get a reaction.
Okay, rim shot. We do the rim shot now, right?
Yes.
So I don't have to make a comment.
Yeah, that way people know that was supposed to be a joke.
Yeah,
even if it's not
gotcha.
funny.
Gotcha.
So what do you want to talk about today, Steve?
Well, this is a two-part series, Skip. The most common mistakes that small business owners make. Stay tuned. There's two podcasts. I'm covering the first three now and the second three in the next podcast. Well, every person that I know, have met or heard about, has embarked upon the challenge of starting a business, thinks very little of the common mistakes that have plagued most other startups. Now, I can appreciate the fact that once the decision is made to own your own business, the lion's share of energy is placed on the joys and potential successes of what that business can bring. But sadly, the list I'm about to reveal required two parts to cover. There are 6 common mistakes that small business owners make. Yes, you can imagine as you read through part 1 and 2 that may have disadvantaged by others. But if you look closely and read the unwritten text, all others are part and parcel of the big 6. So it doesn't mean to encompass all the problems, but they can be sifted into these 6.
So these are the big 6 then, Steve.
The big 6, right. And mistake number 1 is not having a plan. Now, you may be asking yourself, what kind of plan? Well, the answer is all manner of planning, specifically a strategic business plan, a sales and marketing plan, and a financial plan, if I have to nail it down to 3. Now, Lewis Carroll was quoted as saying, if you don't know where you're going, any road will get you there. Planning is more often overlooked by entrepreneurs than any of the other mistakes that I intend to mention. Now, business plan is the very roadmap that will get you started on the right path, and with proper diligence will keep you on track. I liken it to your GPS guidance system. Put in the destination and you will get a turn-by-turn report of the necessary turns to make. The difference is you will have to sketch out the turns and steps that will ultimately lead to the destination in your business. An old insurance adage has come from this statement: nobody plans to fail, they fail to plan. Now, a sales and marketing plan helps you gain greater insight as to your intended client base so that you can organize a means to market to them and ultimately sell them your product or service. Understanding the demographic in your intended market area and your required sales goals need to hit your target revenue numbers will keep you from being all dressed up with nowhere to go, as well as what channels of advertising and how you will use them. Now, the financial plan is most essential. I've said countless times that if you treasure it, you should measure it. Starting with a projection of expected and needed revenue numbers and plan costs associated with those sales will allow you to understand your cash flow limitations as well as the requirements to keep the business in operation. Gosh, that was a long sentence. You start out with 2 bags of cash. One for all opening costs, specifically inventory, equipment, etc., before the doors are open. And the second for operating expenses, specifically staffing costs, utilities, and everyday costs to function. That is, once the doors are open. Now, it should also address a contingency should sales not pick up as quickly as anticipated in your sales marketing plan. This is what the financial plan should address in brief.
Steve, while you're on planning, we've talked about different type of plans and planning, business plans and marketing plans in previous podcasts. But I want to make the distinction here because I don't think I've ever been clear in the past, and maybe this could be clearer too. There's really two parts to planning. One is the goal part or the budget part, where we actually put numbers to paper. This is what we think we can sell. This is how much our labor is going to cost. This is what you know. This is all the expenses we'll have, etc. That's kind of the goals or the budgeting part of the plan. But the part I don't want people to forget, and I may have not made this clear in the past, so I want to make sure we bring special attention to it today, is the strategy part. And that is, how are we going to get the sales to that number? How are we going to keep labor at this cost? How are we going to do that? So I think the strategy part is just as important, maybe even more important than the goals or the budgeting portion of that plan. So it's great. Yeah, it's great. It's great to say that I'm going to do $2 million worth of business next year, but that fails to address how you're going to make $2 million worth of business next year.
Sure.
So
as one of your blogs has said, ideas are easy, implementation is hard.
That's right. That's right. And it doesn't mean you can't change your plan. I mean, almost every plan you make in business will change once you start to learn a little bit more about the market and the business that you're in. But you remember also, though, that good leaders make up their mind quickly and they change it cautiously and reluctantly. But if you're changing it based on data, which I think you're going to talk about next, then I would think that that's a logical adjustment to your business.
Absolutely. In fact, I've said to every business owner I've come in contact with, the joy of being a small business owner is you are agile. You can make decisions and change them quickly, should you need to, based on the circumstances and the situations that you find yourself in.
That's right.
Mistake number 2, ignoring the numbers. Now, you can spend all the time in the world planning and organizing, but if you choose to ignore the research and real-time information that exists week by week and month by month, you will find yourself well outside the original plan. It is likely, actually most probable, that the actual costs, expenses, and sales numbers you projected will not be exactly what occurs, specifically what Skip was talking about. Of course, you plan for deviations, but unless you keep the actual information at hand, the opportunity to adjust the sales, so to speak, will be out of reach. How much deviation or variance from the plan should you allow? Well, this should be in the financial plan. In my travels as an analyst, I have way too often encountered a business owner who was not paying attention to his financial information. Now, having a bookkeeper who provides you with monthly sales and expense numbers 30 days after the month is over 30 days after the month is over is a recipe for failure. Too little information, too late. Stay informed, stay current.
I love the line adjusting the sales, because sales has a dual meaning there, doesn't it?
That's right.
But you're right. You need that information in a timely manner, so you need to analyze it quickly so you can make those adjustments. And you're not always going to hit your plan, and that's why you want to keep not only a record of how well you're doing this month, but a rolling number from how much ground you need to make up from, let's say last month was a bad month or last quarter was a bad quarter. You need to, if your goal is $2 million and at the end of the first month, you only did $100,000 worth of business, you've got a shortfall that you need to make up for, and you got to come up with a plan to make up that shortfall.
It's real-time information. And the analogy I often use is the dashboard on your car. Now, you may not know how an internal combustion engine works. You may not have any idea all the different key performance indicators that fall under the hood of your car. But you always know when something is about to go wrong. And what is that? It's your dashboard. It tells you when an unfavorable variance is about to occur. And I've used that analogy every single time I talk about keeping financials. Your business is the same thing. Knowing where the numbers should be, knowing what your cost should be, what your income should be, and how they should work for cash flow is so critically important for every business owner.
Yeah, I would argue that this is the GPS, right? The other was the plan. I'm going to go from Seattle to Denver. and I'm going to roughly go take these highways and these roads. But once you're on the road, you need that GPS to work yourself around the detours and give you running feedback of the congestion up ahead or whatever may be in your way.
And don't kid yourself, you're going to have a detour. Every small business owner, every business owner, whether you've been in business 20 years, 50 years, 20 minutes, you're going to have a detour. That's just the way it is.
Yeah.
Mistake number 3, trying to do it alone. Warren Buffett was quoted as saying, if you are the smartest person at the conference table, you're sitting with the wrong people. Surround yourself with capable, informed people, an accountant, a lawyer, an experienced business owner willing to share thoughts and ideas to help you. Now, that's a good start. Now, I'm not suggesting you should have all these people on the payroll, but expand your circle of acquaintance to include those who you think might be able to provide you with objective insight into your business. Should you choose to have a partner, recognize what each of you can bring to the table constructively and expand that circle. 2 heads are better than one. Every entrepreneur that I have met has told me a story of someone whom they feel they can spitball with in times of question. Now, a mentor, if you will, it may be a friend, a neighbor, a fellow employee from a past job, or someone that you can count on and trust. It is not uncommon for a person embarking on a new business opportunity to believe that they can handle it. Once you find your circle, you'll be infinitely more successful having a team that you can call upon when a challenge occurs.
Steve, it takes a certain amount of ego to become an entrepreneur, right? But you can't let that ego get in your way to not get the help that you need. You are a smart person. You're smarter than all those people that you left behind in the business you're working in that can't do as well as you can. But that doesn't mean you can do everything as well as at the best levels. So you really need to find a sounding board, or at least someone to spitball with during the week, to toss ideas at, review potential solutions, that sort of thing.
To an earlier comment that you made, I think all men are driven by their ego on some level. But the very ego that got you into starting your own business, which takes a great deal of courage, a great deal of perseverance, is the very thing that you can trip over as you need to take that detour. Now, in part 2 in this little series addresses issues that arise as business operations are up and running over time. Now, whether you are a startup, a business with several years operational history under their belt, or someone who needs to reboot, these common mistakes are very well seem obvious once you see them on paper. It's never too late to change, adjust, correct, or simplify, which is what we essentially try to do. Planning, measuring, and collaborating are all characteristics that successful companies have learned to adopt. Every big company in this country started out small, just like you. Why do some get bigger and some don't? Only some have become big companies because they have followed the experience of others. It's common to learn from your mistakes without you having to make them all. It's wisdom that allows a person to learn from their mistakes of others.
There you go. And I wish I had more wisdom and less mistakes on my resume. Those mistakes, hopefully I can help others from making those same mistakes.
Well, all of your mistakes don't need to be experiential.
Right.
They can be linear.
Yeah.
And we try to take some of that experiential mistakes out of your future because we know we have seen it all too many times, the pitfalls that small companies run into. It is our mission, our goal, our expectation to help small business owners avoid those pitfalls. If you start seeing yourself going down the hill, being able to correct that and make that adjustment before you get yourself in peril is really what we choose to do.
And that's where those KPIs come in handy, right? If you're measuring things, you'll know when you get off course pretty quickly and be able to make adjustments. But if you wait too long, even the best adjustments are going to be a hard time catching up.
Yep, absolutely.
So we got part 2 to look forward to next week then, Steve, eh?
That is right. Next week or next podcast in any event. But now our newest edition of the podcast is story time. Gather round, grab an adult beverage and listen to this. Keep in mind that this story is a real company in existence today, having started, like many of you, from humble beginnings. And thanks to our podcast, they simplified things for greater results. Tell us a story, Skip.
Well, this is a story about a compelling example of a company that struggled while trying to go it alone and then turn things around drastically. In the early 1990s, this company was facing significant challenges that threatened the very existence as a dominant player in the technology industry. In the 1980s, they'd experienced rapid growth, but had become unwieldy and very bureaucratic. The company was known for its centralized decision-making process and a culture that was resistant to change. In addition, their flagship product, which had been the company's bread and butter, was facing intense competition from smaller and more agile companies. In an attempt to address these challenges, they decided to pursue a strategy of self-sufficiency. The company sought to develop and manufacture its own components in-house. However, this approach proved to be costly, slow, and less adaptable to the rapidly changing technology landscape. By the early 1990s, they were in dire straits, reporting significant financial losses, laying tens of thousands of employees off, and facing potential existential crisis. The company realized it needed to change its strategy fundamentally. So in 1993, Louis Gertzner, a former executive of the RJR Nabisco and American Express, with no previous experience in the technology industry, was appointed as their new CEO. Gerstner recognized that the key to turning the company around was to abandon the go-it-alone mentality and embrace a more open and collaborative approach. Under Gerstner's leadership, the company shifted its focus from an inward-facing, product-centric approach to an outward-facing, customer-centric strategy. Instead of trying to do everything in-house, they began to partner with other companies and leverage external expertise. The company also embraced the rising importance of services and solutions over hardware. Have you figured out the company yet? IBM's transformation was successful, and it became more nimble and adaptive organization. The company's financial performance improved significantly, and it regained its position as leader in the technology industry. The story of IBM's turnaround highlights the importance of adaptability, a willingness to collaborate, a customer-focused mindset, and it also emphasizes that sometimes success comes from abandoning the go-it-alone mentality and being open to external partnerships and expertise. Inspiring story, wouldn't you say? I hope it inspires others with similar stories or background, and demonstrates once again that nothing is impossible with passion and perseverance.
That's right. And I think that a really important line that you put there is a customer-focused market. It also emphasized that success comes from abandoning a go-it-alone mentality. And that's one of those very important mistakes that business owners make. We just talked about that a second ago. Another similar story to this, and I used to use this with clients all the time, getting an outside approach. In fact, the former CEO of Boeing became the new CEO of Ford. I want you to think about that for a second. From one industry, complete different industry. Sure, they're vehicles, but you have to look outside the norm and be able to make those decisions. So it is helpful. They don't have to be in your industry to see issues or problems. And I think this story sort of exemplifies that. I like it.
Finding strengths that you don't already, bringing in strengths that you don't already have. I think that is critical.
Yeah.
But I don't think anybody under 50 will get this. Maybe not even under 60. But I would say Betamax is a good example, right?
Brilliant example.
Sony trying to corner the market on a specific videotape recording format. And it did itself in because people wanted the cross compatibility of VHS instead of Betamax. And like I say, if if those don't know what I'm talking about, can Google Betamax.
Yeah, great. Say, let's cut away for a second and find out, for listening to us today on this lovely podcast, what your free gift will be. This week's free gift is our marketing evaluator. Now, do you ever write an ad and wonder if it is going to have the impact you intend for it to have on your potential customers? Well, this tool is designed to help you review your current marketing impact and efficacy for deciding upon improvement or reassignment. We all know how important planning is, especially when it comes to planning for profit. To ensure that you are planning to put your best foot forward in marketing your business, this tool is a great resource for you and your marketing effort. Let's let Skip show us around.
This week's tool, Steve, is pretty simple. It's really just scoring yourself in several different areas, but I think it'll really help people determine how powerful and what type of an impact their ads will have. So each category, you would pick which number best describes your ad, put it in here. So we're taking some of the subjectivity, but not all the subjectivity out of writing these ads. Put your points in each of these sections, each section, and at the end, it'll give you your average points, and it will tell you whether you should probably start all over from scratch or whether you have something that's clear, passionate, precise, and powerful. Pretty simple tool to use, but I think it'll be really effective for folks when they're writing an ad or evaluating an ad that was written for them. Thanks, Steve.
As Skip mentioned, once again, the inputs are minimal, but the outputs are very powerful. Now, this tool can be very valuable in helping you look more objectively at your marketing products and evaluate just how effective it will be to your constituency. Now, we hope this makes your business a little more predictable and profitable. And the way to get your copy of the Marketing Evaluator tool free today is to go to the products page at resources-development.com and use the coupon code ADCHECK. That's ADCHECK to get yours absolutely free. And this product is a $9.95 value that you will receive for listening to us today. Our gift to help make your life biz easier.
Write that ad and stand back and watch the sales roll in. Right, Steve?
There you go. Thanks, Skip.
Okay, folks, I think that's it. Enjoy your free gift. I hope the podcast was helpful today. So let's wrap it up, Steve. That is a wrap.
Thanks for listening to today's Biz Easy podcast. If you enjoyed our broadcast, we would kindly ask you to like, subscribe, and share with other entrepreneurs. See you next time on the Biz Easy podcast, where business is simplified for greater results.